सर इधर ना यहीं से बोलेंगे ना.
Members to speak out, please. Before we start, just wanted to know, I mean, first members, can they stand up, please? So that I will, requesting over as first members. So just wanted to know how is your experience for 1 or 2 sessions. So feel free wherever we can improve or anything, any area where you need, you feel that we need improvement. We want to. So suggestions are most welcome. We're trying to improve on every area. We try to bring best of the speakers. From the venue actually today, we have our event regular events at Coimbatore Continental, but today it was not available. So because of that, we have to have a visit here. So apologies for that. So if you can just announce your name, just mention your name or what you do, just brief to me.
2005 qualified chartered accountant. I always wanted to be part of this circle, but due to the pressure thing on the weekend, I couldn't join. And now I've been working for insurance companies in the last 20 years. I worked in ICC Prudential, ICC Lombard. I was a part of the Motilal Oswal team in the IPO part, where I worked with a small 6-member team. And then I worked with ICC Lombard. And last year I was at Kotak Mahindra Life Insurance Company, worked with the Kotak Mahindra Bank. And the last year of the compliance officer of the Liberty General Insurance. So I worked with Life General for the last 20 years. 30 years of compliances for RBI, So now I've started my own practice giving advisory services to the insurance companies for the compliance as part of it, of how to set up a compliance department and what processes and all it has to be done through. So this was my first session, and I'm telling you, I'm really entitled with the first speakers' insights on all the regulatory matters. I could so very connected to the auditors that I used to attend, and there the last minute data submission just because of board meeting hazards. I could completely relate it. Thank you so much.
Hello, hi. I'm CS Akshiladia. I qualified in 2021 and currently I'm working with Affluence Advisory as a financial analyst. It is lovely being a part of the study with them.
Thank you. Thank you.
Hello, I'm Kulpesh Bulsani. I'm a chartered accountant. the CA, CISA, CFE, Valuer, or IB. All certificates are I'm having, and I'm working as a practicing chartered accountant in Lower Parel. Thank you.
Good morning, friends. Myself, Seema Parekh. Thanks, and I'm basically mainly concerned with the audit and insurance department. So today's session of within my was really helpful to me. I'm looking forward more sessions of audit assurance to help us. Thank you so much.
Thank you. Thank you for inviting me.
Thank you. So he's my friend. We did MBA in CA in 2015. So he's coming all the way from Marine Lines to me. So thank you. And on next Saturday and Sunday, there's a cricket match jointly with WRC. So we have formed the 4 teams, 10 teams and 2 male teams. So Sakshi is a new joinee, so she's also part of that cricket team. So thank you. So with this, I would like to invite DDG function of our host speaker, and thank you, Vajani sir, for accepting on on one call. So he said that JP Nagar I am a regular member, so it's my family kind. So thank you for sir saying some nice word, making us motivating for doing more impact like this. So DDG.
Ketan Vajani ji is not a new speaker. He is a family member. He is always here on one call. So he doesn't need any introduction as such. His lecture will speak about it more. But still, because it's a formality, I would really like to do it. It's my pleasure. CA Ketan Vajani ji is a consultant tax advisor in litigation and direct taxes. He regularly appearing before ITAT, DRP, CIT, and CIT in direct tax matters. He is a chairman of the chamber of, presently he is a chairman of the Chamber of Tax Consultant and member of Tax Audit Quality Review Group. He has been at various posts at the Chamber of Tax Consultant. He has contributed to many articles in the chambers and the newsletters of WIRC and election team and WRC reference manual. Also, he has been contributing a lot. He's a paper writer at RRC Chamber of Commerce, RRC Chamber of Tax Consultant. He's done many seminars. There's countless seminars he's done, and that's why he's here at JP Nagar, because he's the best. So I welcome you, sir, and I request Chintan Lodha ji to please give him a memento. Amar sir, please come forward. The floor is yours, sir.
Good morning, ladies and gentlemen. Good morning to one and all. Yes, it is still a morning. So by the time we end, it will be afternoon, but yes, it's still a morning. It's always a pleasure to be at JP Nagar Study Circle, and Bansal sir and other senior members were also mentioning that I'm coming regularly. There is reason for that. The reason is that the love and affection which we get at JP Nagar is amazing. I remember right from the time when first time Manish Gadia introduced me to the study circle, and he insisted that I should take some session. Probably, I think the first session which I took was on tax audit, if I'm not wrong. If my memory is correct, tax audit legal issues was the one which I took maybe a few years back, if I'm not wrong. Chintan bhai vouched that is. Yes. So I think Chintan bhai was the convener, if I'm not wrong, at that time. Yes. So from then, it has been a regular feature, and it is also a pleasure because the quality of the education which is shared here and the zeal of the members to discuss any topic in a threadbare manner is always there. apart from the numbers are a different story. One of the biggest study circles of Mumbai, I was just informed by Bijal madam that it is somewhere in the range of 1600. So, such a huge number, and therefore, that is one more, that is just one aspect of it. I am normally not on numbers. I am more happy with the quality, and therefore, number is one aspect, but yes, the quality of discussion is also very good. So it's always a pleasure. Today also, my attempt will be to, deal with the topic which I am given, and we'll be trying to deal with it in a threadbare manner. And since, it is a study circle, our purpose should be rather to, rather than having a monologue and I just giving a lecture. I would be more comfortable, more happy if all of you are also comfortable. You can ask your questions whenever you feel. If you have any thoughts on any particular topic while we are on any particular slide, practical insights, because apart from the statutes are always there, and anybody can refer to the statutes. But the real life experience which we all have gone through in our journey of a profession, they are the pulse, and that can add tremendous value to our learning. So real life experience is most important. Therefore, please feel free. I am absolutely open, and we can always discuss then and then, no issues. Please don't carry any feeling that I'll be disturbed. I don't have that habit of getting disturbed, because when I stand up before tribunals, I am ready to prepare, ready to answer maybe absurd questions also from the bench. So all those things are part of life, and therefore one should leave it like this. We will try to deal with all the slides which I have put up. Even if we cannot, we should be happy with whatever we do it thoroughly. That is our purpose. But there are not many number of slides, so it should not be a challenge. We should be able to do that also. But feel free to chip in, and feel free with your thoughts, your ideas, your questions. They are most welcome. Secondly, about today's topic, and when we were talking on the phone with Bansalji, the idea was that, and Jayesh Bhai was with him, Jayesh Thakkar, the earlier past convener. So the idea was to deal with the topic from a journey from 61 Act to 25 Act, and now that we are having 25 Act live and kicking, our idea was basically to have a discussion based session with a discussion based approach where 61 to 25 Act journey will see. And therefore, when we talk about penalty is something which pinches everyone, all of us. Now, I may be always worried as to whether I'll be taxed or not. As a professional, as a taxpayer, in all sense, I'll be always worried whether I'll be taxed on a particular receipt, whether I'll be getting a particular deduction, whether my action which I'm going to file in the return of income is justified, not justified, legally sustainable, not sustainable. All those issues are always there at the in the mind. But addition or taxation is one part of the story. The bigger worry and the bigger hurdle is when somebody tells me that, boss, not only addition, come here and pay the penalty also. Now that is something which hurts, which hurts like anything. If I'm having injury and somebody rubs a salt on that, so that is more painful. The penalty plays a role of the salt being rubbed on the injured part, and therefore one will never be happy about penalty. And therefore, it is all the more relevant for all of us who are in practice. I understand some of them are in industry, like Madam is in insurance industry. There are many others who may be from industry. From industry perspective, yes, you will be probably feeling that this session may not be great for you. But yes, there might be some insights, something here and there which you can pick up as per your experience, as per your horizons. But yes, as far as the members who are in practice, certainly, because we have to cater to our clients, and therefore for all of us it is all the more important. Having said so, let us discuss about the penalty provisions. And of course, as usual, I'm always thankful to Bansalji and all the team of the JB Nagar Study Circle. Thank you very much for having me here on a Sunday morning. And by the way, happy Akshaya Tritiya to all of us. This is a day where it's a very auspicious day in the life of our calendar, in the yearly calendar. It's a very, very auspicious day. So happy Akshaya Tritiya to all of us. So many pious things, so many auspicious things being done today. Right from here, I'm going to go to one relative's place where he's entering his house today. So many, many things happening today. And I am told that this is the first meeting of the study circle in the new convener's term. So yes, a very good, very auspicious day to start with. With that, friends, let me go into the subject properly. So when we see journey from 61 Act to 25 Act, now if you ask me very frankly, and Nidhi madam was talking to me that we want to have a complete program of the study circle from having difference between 61 to 25. To my mind, there are few things which have changed. Fortunately, unfortunately, on both sides, few things have changed. But broadly speaking, and in a global manner, if you see on a macro level, probably very few things have changed. Broadly, it is the same policy which has been continued. And why so? We were told when the exercise of this new formation of act started, we were told very clearly that the government does not have any intention of making any policy changes. For whatever reason, good or bad, they had this in their mind that they don't want to make policy changes. Now, if you ask me personally, my feeling is that it should not have been this approach. This approach, to my mind, is not the correct approach. Please understand, from 61 to 25, we have taken almost 65 years to get this act changed. You are saying that you don't want to live with the colonial laws and therefore you are changing it. So far, so good. But when you are changing, and in this journey of 60, 65, 70 years, you have seen so many things. And we are all talking about 61. If you compare 22 Act and today, then it is almost a century. And after a century, you are changing something. In this century, you have witnessed so many problems, so many areas where there are litigations being generated for no reason. Now, this was the golden opportunity, so to say, for the government to change it. It is once in a lifetime that this happens, right, for all of us. I'm sure if it takes more 65 years from today to have one more act, or 50 years also, right? Most of us may be out of the practice, or maybe, in a different, maybe again child and again learning from poetries, those may be the situation. So therefore, this is a once in lifetime situation. At least I'm rest assured, if it is after 50 years, people are, 95% of us will not be in the practice. Even if we are living our good life, we may not be in the practice for sure. So in such a situation, what was wrong in changing policy decisions also? Have a brave heart, change it. And many of the things we'll see when we come to respective slides, slowly I'll just make a mention of it, that there was a suggestion given, a valid suggestion, a suggestion which could have been implemented, which could have made the life better, has been thrown away. Has been thrown away only on the pretext that we don't want to make a policy change. Not making change, then don't change. Keep 61 Act as it is. What was wrong in that? Yes, it was bulky. It was having huge number of almost more than 1,200 pages, etc. But that's okay. We are all happy. We have lived with that. We were all happy with that. Now, if you want to change, then change it completely. Half-hearted changes, to my mind, should not be a great thing. But anyway, this is what we are told, and therefore we have to live with it. What has changed, therefore? To my mind, insofar as at least penalty provisions are concerned, and we are today talking about penalty provisions, the study circle is in the process of structuring the entire 61 to 25 the journey for all the topics together. For that, yes, various sessions will be held, and it will be a good discussion. But insofar as penalty is concerned, probably I would feel that nothing great has changed, except the 2026 amendment, which I have kept towards the end in my presentation. Some of the amendments in 2026 has made some changes to the 61 Act also, as well as 25 Act also, and at times to one of them, at times to both. And therefore, we have a situation where there are very few changes are happening. What is changing is primarily the numbers. Okay, so when I'm talking about in my presentation, section 270A. 270A is the section of Income Tax Act 1961 that had some provisos and some subsections. Now, we are told in the 2025 era that the new act should be simple to understand for a common man. That is the purpose. I don't know which common man is going to actually read Income Tax Act, has the guts to pick up Income Tax Act, first of all. It requires a big heart, a courage to pick up Income Tax Act and read and say that I have tried to, I have understood. I have spent my 30 years, more than 30 years of life in practicing only in the direct taxes, not knowing anything more into accounting standards, companies Act. I am illiterate in those areas. And still, today I cannot say that I know Income Tax Act. I cannot say. It's Bhagavad Gita. Every time you open, you get a different meaning, right? Bhagavad Gita, when you open, every time you get a different meaning to your problems. The problem which you have in your mind Bhagavad Gita will answer in that fashion. Similar is the provisions of Income Tax Act, and therefore I am damn sure that no common man will ever read Income Tax Act. We are happy if they read. We are happy if they don't give us written filing work. We are more than happy. Because two reasons. If they don't give written filing work, our members will be more happy doing some better work. Part A. Part B, the part of laborious job will be done by somebody else, tax practitioners or the assessee himself. Let them do them. Let them, in a joking way, of course, in a lighter way, let them commit the mistake and then come to us. We'll have better way of earning our income. That's in a lighter way. But then the reality of life is that no common man is going to read this. But anyway, we are told they don't want provisos, they don't want explanations, they don't want such things into the new Income Tax Act, and therefore what has happened is, instead of the sections being confined to 288, which was in the 61 Act, and I am very sorry, but I don't remember the exact number, the last section in the Income Tax Act 2025. Now we have got numbers have changed. So 270A of our beloved 61 Act is now 439 of the 25. Pardon me for referring to 270A even today. I am aware that now there is a 439 of 25 Act, but you can relate because there is no big change. Only the name has changed. So instead of telling somebody with A, I'll say Mr. A or Shri A. That is the only change probably which has happened. So now it will be 439. 270AA is now 440. And there is one 271 AAC, which we are going to see, is now 443. These are the only changes. I can see that some of you are taking notes. Good, take it, no problem. But I have shared the presentation and will be shared with all of you. There is no difficulty on that also. So rather than spending your effort and energy on that, if you talk to me, probably will be having. But yes, so this is the thing. Now let us go to the journey, and therefore journey starts from. I am starting from 61 Act. There are members who might have seen 1922 Act also. There are maybe a couple of them who might have seen 1922 Act. Is there anyone who has dealt with 1922 Act in this audience? No one. Good. I was born in 72, so I have at least known. Right. So 61 Act I have started, and 61 Act, the provisions of penalty is this. The first provisions were 271 1C. This was a provision which has created huge amount of litigation over the period of years. 271 1C, right? Which has been changed with effect from assessment year 17-18. So till 16-17 we had 271 1C, and then from 17-18 we are having 270 capital A. The focus was different, the method was different, and therefore the answers were also somewhat different somewhere. As of now, I'm talking about 61 Act only from pre-2016 and post 2016. So 271 1C era and 270 A era. Why this is required? Because there are some pearls of wisdom lying there. There are some good things, good fundamental principles lying in 61 Act. Let us not forget that. Let us keep that. Let us inherit that. If I am earning 1 crore rupees a year, but my father was earning even 10 lakh rupees a year, right? Let me be happy with that inheritance, because that inheritance has got huge value. It gives you the platform to jump further. Therefore, let us not forget 271 1C completely, right? What was the focus? Focus in 271 1C was this: if I do concealment of particulars of income, or if I furnish inaccurate particulars of income, then I was liable for penalty. Come 2017, they changed to 2017, assessment is 17-18. The change is section 270A comes, 271 C is done away with. And we are told that now the focus is on two things: underreporting of income and misreporting of income. Misreporting of income is again a subset of underreporting of income. We are told that underreporting in the form of misreporting. This is the word which is used in the Act. But for the purpose of our discussion, loose discussion, we can say underreporting, misreporting. For next 1.5 hours, we can say underreporting and misreporting. These are the two things. So what was concealment and what was furnishing of inaccurate particulars have now completely changed and come down to underreporting and misreporting. There is some arithmetical change which is being made in the computation, etc. When we come, right? 270 AA, which is one more thing which came up in the process, and this is a good thing. Now, here is something which 270 AA, I'm really happy that the government thought of something like immunity. That you then don't want to tax, you don't want to rather levy penalty on each and everybody, provided he is a law-abiding citizen. That is the whole idea of 270 AA. But unfortunately, the manner in which it is executed, the concept was really super great concept, and should have been given 100 out of 100 marks. But when you come down to the provisions proper and you see the real life challenge which happens, and thereafter the suggestions which the chamber from chamber side we have given, and the manner in which those suggestions have been interpreted, implemented, you really feel disheartened. You feel that where something would have received 100 out of 100, now probably you don't want to give more than 15 or 20 marks to that provision. This is what it is, right? I'll come to that. But immunity provisions are there, 270 AA. Under the new act, it will be 440, and 271 AAC is one more section where there is a penalty possible under the 61 Act. Now this section, when it went to the 2025 Act, it was incorporated as section 443 of the 2025 Act. 271 AAC verbatim 443 of Act of 2025. But in 2025, before the Act starts, before the Act actually sees the light of the day, 1st April 26 rather, was the day on which it was supposed to start implementation. February 26, the budget comes, this last finance bill, and in February 26 finance bill, they have omitted this section 443. They have omitted. So 271 AAC, virtually the last year is assessment at 26-27. From tax year 26-27, and by now I think all of us know the difference between assessment year and tax year. I am not going to do on that. So come tax year 26-27, we are not going to have 271 AAC, and therefore 443, which was there, is already buried, died and buried. Because of that, they have made some change in the primary section, being section 439. That means our 270 capital A, right? Yes. So this was, as I said, conceals the particulars of income of furnishes in particular, etc. 271(1)(c) was also applicable when assessee offers an explanation. Assessee fails to offer an explanation. So I should have, even if I claim something, I should offer an explanation, which should be a bona fide explanation, and it should not be a false, and I should be able to substantiate that in the opinion of the assessing officer, right? If it is not bona fide, then it will be a problem. Otherwise, there is no difficulty, and I should disclose all material facts and circumstances leading to my view which I have taken. If I do that, then I was I was not having the difficulty of penalty. Otherwise, penalty was applicable under 271(c). These are the settled principles. I just wanted to mention this in one line, but I thought there are a couple of them, 5, 6. So I just put each bullet. See, please appreciate even today, even when we are going to the 2025, penalty proceedings are separate and distinct. Now, how far this remains a valid proposition? This position has been there valid for years and years, and in I think not less than a dozen cases, the Supreme Court has said that just because there is an addition made in the assessment, that does not result into penalty. At least a dozen cases may be there, maybe more, right? But this penalty is separate and distinct is now being taken for a ride when we see the last few slides. Where now in 2026 finance bill, there is a proposal of integration of assessment order and penalty order. You must have attended the finance bill seminar, and probably at that time this must have been discussed. So this is something which is, to my mind, unfair, but yes, subject to that one amendment which is really disappointing. Let us appreciate that penalty proceedings are separate and distinct. So just because there is an addition, it doesn't automatically lead into penalty. This is very important, because many times assessee is more worried, mera addition ho jayega lekin penalty lag jayega. That is more important, right? They are quasi criminal proceedings. This is what we are told by Supreme Court in right from Anwar Ali's case, then traveling down to Dilip Shroff's case judgment, and then in between there was a judgment which was a disturbing judgment of Dharmendra Textile Processors, and there the view was taken. Of course, that judgment was under excise laws, but the view taken by the Supreme Court was thereafter taken to some different stage, and we were told that no, they are civil liabilities, penalties are civil liabilities, and therefore mens rea is no more important. All those things were there. Fortunately, thereafter, when we came to Reliance Petro Products, etc., it got diluted to an extent, and we have a reasonably good position when we say that no, as far as there is no ulterior motive on my part, penalty should not be levied. That was the journey. Yes. If complete facts are disclosed, the penalty cannot be levied, and where there is a genuine difference of opinion, penalty cannot be levied. It's not automatic fallout of addition. So this is the long and short of some fundamental principles which will live with us even in 2025. So if you are posed with a challenge of penalty, ask yourself this question: is there is my conduct genuine? Is my conduct wrong? If you're falling on the other side, then if your answer to that is yes, probably when you, with that idea in your mind, when you start again reading the provisions, you will find some solution somewhere lying. It is not that everything has been taken away from us. So certainly there is possibility of one to come to a conclusion that it will be still possible for me to defend a case on a merit, on legal principle as well as on merit when it comes to penalties. Ask these fundamental questions to yourself, and probably most of the answers should come from there. Yes. So from 17, we have this assessment area 78 to 78, and I will just deal with some of the subsections, because so that our discussion is complete in all regard. I am sure that all of us must have read this many a times. All of us have actually faced this in our legal life. But for the sake of completeness and for the sake of our discussion today, it is always appropriate to refer to the Act and come to the conclusion once again. So subsection 1 says that the power is available to the AO, joint CIT appeal, etc. There are the 4 authorities mentioned, but for the purpose of our discussion, let us mention AO only, so that AO always हमारे दिमाग में AO रखेंगे, तो it will be easier for us to us, right? During the course of proceedings, this is very important. See, please understand that the AO or CIT appeal, etc., may initiate the proceedings of penalty during the course of any proceedings. So if there is no proceeding pending, say for example, my assessment is over 3 years back, or maybe 3 months back, or 3 days back also for that matter, and today if I initiate penalty proceedings, probably it will not be correct, because the fact is that you should be taking this first step. Initiation is the first step, and thereafter other things follow. The first step has to be taken during the course of any proceeding. So during the course of the assessment proceeding or reassessment proceeding, if I first conclude that yes, there is an underreporting of income or misreporting of income, then I am permitted to issue the notice of 270A. If I have closed assessment proceedings, I have issued the assessment order without initiating this, then certainly, to my mind at least, the AO loses the right to initiate 270 capital A or 271C or 439 for that matter. Subsection 2 decides, rather prescribes underreported income. What are the situations? So there are 3 or 4 situations which are prescribed. So first of all, cases where return is filed. So please appreciate, if you file your return of income and there is an assessment going on, right? In between those two, there is one stage called processing, 143(1)(a). In the 143(1)(a), if the income is increased, say for example, you filed your return at 10 lakh rupees, 143(1)(a) makes it the prima facie adjustments, it makes it 12 lakh rupees, and thereafter the assessment continues to 20 lakh rupees, suppose. Now we are told very clearly that in so far as report journey from 10 to 12, from return stage to intimation stage, there will be no penalty. There will be no penalty. Only from intimation to assessment stage, whatever is there, I'll be having the difficulty of penalty. So this is what it is. This is a situation where there is an underreported income. Similarly for MAT, AMT, etc. Cases where no return is filed, if I have not filed my return at all, then the situation is that income assessed, if it is greater than basic exemption, if I am having basic exemption, if I am individual, HUF, etc., there is a basic exemption available. Then if I am a company or a firm or AOP, etc., where there is no basic exemption provided, then of course 0, right? So income assessed will be considered as a underreported income. Same for MAT and AMT. And reassessment situation, reassessed income minus original assessed income. So penalty at every stage in a staggered manner. Taking our example further, 10 lakh was the return income, 12 lakh is intimation, 15 lakh is, say for example, my assessed income. So from 15 to 12, this will be judged at the stage of assessment original. Thereafter, maybe 6 months down the line, 1 year down the line, reassessment takes place. From 15, it is taken to 25. Now that 25 minus 15 will be subjected to penalty rather at the reassessment stage. So every stage and every difference, there is a penalty prescribed, depending on, of course, whether you can escape under 270A subsection 6, etc. That we'll see. But subject to that, this is the broad mechanism. Reduction of loss or converting loss into income. So this is of course right there in 271C also there. Before many decades, and very senior members would recall that there was a view that when loss is reduced, there cannot be any income and therefore there cannot be any penalty. Supreme Court in the case of Prithpal Singh has taken a view. That was but many decades back. I think at least 3 or 4 decades back, this view was taken. Thereafter, the amendment had happened, and therefore, in 1C regime also it is there. So if I am filing a return with a loss of 10 lakh rupees, if the assessed loss is 8 lakh rupees, then the 2 lakh rupees is my income, which has escaped assessment under the 271 1C regime, and 270A regime, it is under reported income. So therefore, I am liable for penalty subject to other conditions, of course. Or conversion of loss into income, similar position. And this lays down the computation. So subsection 2 lays down the situation. Subsection 3 lays down the computation mechanism in different situations. More or less, it is the same. It is only the arithmetic formulas given in subsection 3, and subsection 2 provides the prescriptions. That is the broad thing. Yes, otherwise there is no big change. Yes, subsection 3 says MAT and AMT. So now see, say for example, there may be a situation, I may be under MAT, and there were also views of various courts, but the courts have said that the income assessed is under MAT. Suppose if the income assessed return is under MAT, assessed is also under MAT. There were some decisions where the courts have taken a view in such a situation, you cannot say that there is an income which has changed, because under MAT, what is his book profit? Under AMT, again, what is adjusted total income? So it is not the income as we understand under the normal provision, and therefore penalty will not be levied. These were the decisions of the court. And to plug these court decisions, the situation is where we are told that total income as per normal provisions minus total income assessed. So primarily A minus B will give you underreported income, similarly under MAT. So even if you are not having any normal computation, but under MAT, this formula will ensure that you still have underreported income and the penalty will be levied. And by any chance, if at all, the additions are made under both the provisions, which is normally not a very frequent situation, but yes, at times it may happen that the addition is made under MAT as well as under normal provisions. In that situation, there is a mechanism to ensure that you don't get double hit. You will not be levied penalty for both the things, and therefore in one part at least that D part will be removed actually. So therefore you don't have more difficulty. It will be penalty will be levied only once. With this formula, A minus B plus C plus minus D. 4 and 5. Now this is something which is very unique, and I don't know how many of you maybe have encountered this, and this is very rare in fact actually. What is 4 and 5? Subsection 4 says, consider a situation. I'm not reading the act, I'm not reading the slides. I'm just giving you examples so that it becomes easier to understand. This is for you to refer at later date. Consider a situation. In my case, today I am told I am spending, say for example, 50 lakh rupees for a wedding in family. And the allegation on me is that, look here, this is a income which is your undisclosed income. You have not reported that income, so therefore you please pay tax on it. Also levy penalty with it. I say wait a minute. You are saying this is my undisclosed income. Okay, I may accept, I may not accept. But please appreciate, then in last year, or last to last year, or the year before that, in all these 3 years, 4 years down the line, you have already made assessment on me for my unrecorded sales. That is the fact. Suppose I'm just giving example. If it is so, that sir, पिछले साल मेरा income में आपने unrecorded sales में 50 लाख रुपए ऐड किया, वहां पे मैंने टैक्स भर दिया है. अब जब मैंने वहां पे टैक्स भर दिया है 50 लाख, तब I am spending that very 50 lakh today for my son's wedding. You cannot tell me, boss, you tax me here, and you levy penalty today also. Not a fair proposition. Interpolation, right? If I do that, if I ask for that type of relief, if this is my claim, then what? Then we are told in subsection 4 that, look here, if in past, when your undisclosed sales were there, you have suffered penalty. You have suffered penalty in past, then today, no penalty. Fine. But if in past, when this addition was made, penalty was for whatever reason not levied on you. Whatever reason, penalty was not levied on you on that undisclosed sales. So today, when you come down to this year and you are claiming that you have purchased a property or you have spent on a wedding, that time if you want to claim a setup of that, then please pay penalty today. How this is relevant? Possibly some of the interpolation I can also see from the year prior to 2017. So when this in 2017, the same provisions were there in 271C in some different form. It was in explanation form. In 270A, it has come by way of subsection 4 and subsection 5. So possible that under 271C regime, when I was there in 14-15 or 15-16, I have recorded unrecorded sales, I have suffered addition, not paid penalty. But when it comes to 270A, now the year has changed and therefore the regime has changed. Therefore, as a backup provision, which was there in 271C, this was also taken here. I also feel that in today's times, this may not be very relevant for the government also, considering the fact that insofar as such unexplained expenditures are concerned, unexplained investments are concerned, we have a separate section, namely 271 AAC. So if my additions are made under 68 to 69D of the Income Tax Act 1961 and the corresponding section in 25 Act are 102 to 106, right? In that scenario, probably this will not be relevant. Subsection 4 and 5 will not be relevant at all. Why? Because anyway, I'll be governed by 271 AAC, not by 270A. But this is given as a matter of abundant precaution that yes, suppose it is not an undisclosed expenditure, it doesn't fall within the definition of unexplained expenditure, or investment, then there is a backup available in 278 to levy penalty on you by way of subsection 4 and subsection 5. This is the long and short of subsection 4. Subsection 5 is basically giving you the year-wise transition. So say for example, I am in the year 24-25. In my example, I have taken 24-25, and I am claiming in this year about a situation where there is an unexplained investment or unexplained expenditure. Then how do I compute the penalty of that year? Today, how do I compute the penalty of that year? Because the rate of tax in that year may be different. Nowadays, the rate of tax is more or less same for all these years. For quite many years now it is same. But I may be having different slabs if I'm an individual, etc. In such a situation, I may be having some unabsorbed losses, whatnot, various bad credit, many situations may emerge. Therefore, in such situation, we are told how to relate that, how to make that correlation between the years, and that formula is given in subsection 5. It says that you have to travel backwards. So in our example, situation 1 first, if my underreporting is say in first year, 50 lakh rupees was my suppressed income on account of sale, then 30, then 20. So total I have got 100 lakh, meaning 1 crore rupees as my undisclosed sales, and penalty was not levied by definition in those years. Then when in the current year, when I make the investment of 15, I will be required to set it off against the first, that is 23-24. And therefore, my computation will be in that manner. 23-24, 15 will be absorbed. It is 20, therefore I can absorb it. And that is the end of the story. But if it is 95, situation 2, other figures are remaining same. But if it is 95, then first I will exhaust 20, then 30, and then only 45 from the earlier year. So this is the manner in which one will have to compute the relation of the figures. This is the way in which you will have to compute. This is what provided under subsection 5. Friends, this takes us to a very important subsection, subsection 6. This is the subsection which allows you to find an escape route. This is an escape route from clutches of penalty. And for a person to move out of penalty provisions, to immune himself, to protect himself provisions from penalty, this is the subsection which one should always look. Whenever you are having any situation where you are dealing with penalty show cause notice, if you want to save your client from there, try to fit into this 5 clauses. There are some 5 clauses prescribed in subsection 6. If you can fit in there, then yes, you are through. You will not be having any penalty difficulty, right? Now, what is the first clause rather is that I offer an explanation. 270A subsection 6 applies in 5 scenarios. First I am dealing with. I have offered an explanation to the AO, joint CIT appeal, etc. Loosely speaking, AO, right? I have offered an explanation, part A. Part B, that explanation is bona fide. And part C, I have disclosed all material facts to substantiate the explanation. If I have done these 3 things, I should offer explanation, that explanation should be bona fide, and the explanation should be substantiated with material evidences, facts, etc. If I can do that, then penalty cannot be levied on me. Then penalty cannot be. This is the clause which most of the time comes to the rescue of the assessee, because most of the time you will be giving some explanation. You'll be able to have some documentary evidence, some explanation on all the parts. And if you do that, then you are out of the clutches of the penalty. So please read this in a very minute manner. Whenever you get a case, facts of those cases, try to fit into clause 1 or clause 1, 2, 3, 4, 5, any of them, but 1 is the most common, I believe, right? Then second is estimated additions. So say for example, in my case, the books of accounts are rejected and there is an estimated addition made. Now, in such a situation, we are told that you cannot levy penalty because subsection 6 covers this as an exclusion from underreporting. Unless and until there is underreporting, there cannot be any penalty, first of all, right? Similarly, for misreporting also, there has to be underreporting first. If there is no underreporting, that cannot amount to misreporting. So therefore, in subsection 6, this is very important, estimated addition. Now here there is a little history to this actually. In 271 1C regime, we were having a situation wherever there was an estimated addition made, courts were always taking normal view. Normally, courts were taking a view that look here, this is ultimately an estimated addition. There cannot be any penalty on estimated addition. You are assuming gross profit of somebody at 15%. He might be actually having 18%. He might be having 12%. He might be having 2%. Therefore, in such a scenario, the courts were saying that no, we don't permit you to levy penalty on such additions. This was the broad judicial proprietary which was going on at that time. And therefore, in the backdrop of such thing, there was one committee which was formed to give suggestions to the government, namely Ishwar Committee, where retired Justice R.V. Ishwar was the chairman of that committee, a very learned person and very, very judicious person in his approach. He has given the suggestion to the government that why don't you enact this completely? Put it as a part of, now today it is a judge-made law. In our judicial court rulings, we are giving this view, but why don't you put this as a part of the act itself so that the burden is not there? Nobody is unnecessarily made to litigate. Why don't you do that? So this suggestion was accepted, but accepted in a half-hearted manner. Rather than giving a blanket exemption for all the estimated additions, what they have done is that they said that, okay, it should be only in a case where the method of accounting is such that proper income cannot be deduced. So only in those cases where there is a rejection of books of accounts, A1, part A. So please appreciate things which comes to our mind and which one can take it home is that, whenever there is a rejection of books of accounts, the question of 270A will normally not be there. Will not be there. Rejection of books of accounts leads to 270A6 close to, and therefore you will be out in saying that now penalty should not be levied because by your own verdict, by your own version, my method of accounting is such that the income cannot be deduced properly and therefore I am governed. Subject to condition, of course. Wherever any concessions are given, they will be subject to some concessions. And subject to concession is this. What is subject to? They say that subject to the satisfaction of AO that the accounts are correct and complete. Now, if their accounts are correct and complete, why the method of accounting cannot lead me to correct deducing of income? That is a question. But yes, this is what has been given. Subject to the satisfaction of the AO that the CIT, that the accounts are correct and complete, part A. But method of accounting is such that proper income cannot be deduced. Now, both are contradictory to my mind, and therefore this does not have much value according to me, right? And of course, other conditions, no. So this is the only additional condition here. One more thing, estimation of estimation of expenses. So say for example, there is a situation where I have estimated disallowance. In my computation itself, I have made my own disallowance on my own, say maybe 10% of conveyance, sundry expenses, etc. These are normal routine disallowance as we call during the course of assessment. If I have made that disallowance, I have made it 10%. The AO says no, not at 10%. You are required to disallow at 25% or 20%, whatever. Now, in such a situation, we are told it will not be governed by penalty. Penalty cannot be levied because ultimately it is just a difference in estimation. So this principle, which was there in 271C, has been inherited here and it has been applied here also, right? Underreported income is represented by arm's length price as determined by supervising officer subject to certain conditions that the assessee should have maintained information, the assessee should have declared that international transaction in the under chapter 10 in his return, and the assessee should have disclosed all material facts. Subject to that, if the difference underreported income arises because of the TP provisions, computation of arm's length price provision, subject to these three conditions, you are immune, you will not be having any problem. Undisclosed income referred to in 271 AAB, this is the fifth one and the last one. Why? Yes, please. So I'll just in 1 minute. So this 271 AAB, why? Because 271 AAB is a different provision where the penalty is in relation to such cases. So these are the old things. Yes, please. It
could be issued the books to perform that 10% is disallowed
in the computation. In the computation. In books of accounts, we cannot disallow, right? Books of accounts are books of accounts.
No, we can.
You can transfer to capital account.
That's right.
You can transfer to proprietor's capital account, partner's capital account, etc.
So that is okay.
Yeah, that also you can. That also you can say that ultimately my expenses, total expenses, I have divided into two, and I already transferred to my capital account, and therefore I have made a reasonable estimate of disallowance on my own. Now you change it to some different level. I am saying 10%, you are saying 25%. such a situation cannot lead to penalty. Yes, so even if you debit to capital account, fine, or in computation, either way, both will protect you. Yes. Yes, please. 14A. 14A under reporting income, there is no specific exclusion given as such, but you may be able to put yourself into this estimation if you have made some disallowance under 14A. So you have not applied Rule 80, right? You have done some disallowance on your own, some amount, and therefore when it comes to the assessment, they have applied Rule 80, and therefore you can say that yes, at least some disallowance I have made. You can certainly get protected in that fashion. There is no specific mention about 14A section, but you can fall into this estimation. Also, you can fall in the first clause where you can say that I have provided all my bona fide explanation. I can substantiate. Both the things can come to your rescue. Both the things taken together can come to your rescue. Insofar as 14A is concerned, yes, I think nowadays it is a cold story because dividend is now taxable. So bigger controversies have all gone. But yes, you can do that. When this amendment came in 270, there was some view which was, now that this question has come up, I am reminded of it. There was one view expressed by somebody. ठीक है, with a view to protect myself. मैं ऐसा करूंगा, मैं computation and one of the seminars somebody had given this brilliant suggestion. They say that okay, in my computation, in my profit and loss account, sundry expenses are 10 lakh rupees, conveyance is 7 lakh rupees, etc., printing and stationery, all those routine things are there. What I will do in my computation, I will disallow 1 rupee for 1 rupee disallowance, sundry expense, 1 rupee conveyance, 1 rupee printing and stationery, 1 rupee this, 1 rupee that, staff welfare, blah, 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 blah. I have made estimation. Now you are changing from 1 to 1 lakh. That is your decision. But by disallowing 1 rupee, I have said this. Can I take this view? Do I take that view on par? Personally speaking, it will be absurd for anyone to accept this proposition. Disallowance reasonably. See, technically speaking, he is correct. Technically speaking, the person is correct. But I am sure when the courts look at it and the department carries the matter to tribunal or further high court, courts will feel that no, this is absurd. You are playing with the things. Whenever somebody tries to play with the system, the courts will not come to his rescue normally. And that is what my experience tells me, that if you want to act smart, they will find out a way in which your smartness can be handled. So therefore, please don't do over smart activities. A reasonable thing should be taken in a reasonable manner. If you do that, then I think it should not be a problem. Yes. Any other issues on this 270A subsection 6, very relevant section? Any issues are there? We can take up otherwise. Fine. Sorry, I did hear you.
Subsection 440, isn't it?
Yes, 439. Not 440, 439. 270A, the corresponding provision in 25 Act is 439.
446 about the
440 is immunity. We are yet to come there. That is 270 double A.
right.
No, it is there. This same subsection is there in 439.
The exclusions and immunity both are
They are different. This is exclusion from underreporting,
right.
and that is immunity.
Okay.
We'll discuss immunity in detail because that is something where all of us can find some way out.
Right.
I'm coming to that. Yeah. But the sections are same, absolutely same. Except that the numbers might have changed. Otherwise, the things are same. Yes, penalty computation, and we are told this is a very short thing. We are told that if it is case of underreporting, 50% penalty, 50% of tax payable, and if it is a case of misreporting, then 200% of tax payable. We all know this, right? This is subsection 7 and 8. Tax payable is defined in subsection 9. That also deals with more or less the same manner, that situations wise given. So no return filed or filed for the first time under 148, then amount of tax calculated on underreported income plus basic exemption. If I have not filed a return at all, then I have to calculate in this fashion, right? If return is filed, intimation is passed, then earlier assessment here. So we have seen earlier that each stage in our example we have taken 10, 12, 15, etc. So each stage underreported income will be computed. Of that 50% or 200% as the case maybe will apply, and it will be computed. In other cases, where the intimation is not passed primarily. So these other cases would mean where the intimations are not passed. So X minus Y, where X is amount of tax calculated on underreported income and Y is amount of tax calculated income determined under 143(1)(a) or in the preceding assessment order, etc. So in other situations, it will be X minus Y. No double penalty, we are told very clearly. So as a matter of abundant precaution, of course, these formulas take care of it. But as a matter of evident precaution to counter a situation where something which has not been foreseen comes up. And therefore, in such a situation, to counter that type of situation, we are told very clearly in subsection 11 that in any case, there will be no double penalty for the same addition, which is absolutely fair and correct thing to do. Order shall be in writing, that's fine. So this is subsection 12. So these are the subsections from 1 to 12 except subsection 9. Right? We have taken 1 to 12 except 9. 9 I have kept separately because it has got severe implication. So this is 9. 9 is a case of misreporting. Now here is the bigger challenge. If at all you fall under 9, then there are 2-3 things which happen. First thing, your penalty rate goes up to 200% from otherwise which was 50%. So tax, the income, underreported income ka 200% will be your tax. So bigger challenge, first. Second, and even bigger challenge is that you will not be allowed to get immunity. We are going to go under 270AA after this slide very soon, right? So 270AA immunity will not be permitted if it is a case of misreporting of income, right? So bigger problem. If it is underreported of income, no problem. You can go for immunity. You can forget. I don't want to litigate. I am giving my this one tax and I am paying the tax. I am happy. I am not litigating. Give me the immunity. Fine. But if you have misreporting, then you are not allowed. These are the two broad impacts, right? And please appreciate that subsection 9 has got 6 clauses. This is very relevant for all of us to understand. Why? Because when you see the assessment orders nowadays, probably the department's approach is that in all cases, in all, capital, bold, I'm saying all, they are trying to invoke 270A9 in all cases. Absolutely unfair, absolutely ridiculous, absolutely unjustified, no legs to stand in court, but they are doing it, right? Please appreciate only 6 clauses are there. If you fall under any of these 6 clauses, then and then only you can be called to have misreported income. Otherwise, it cannot result into misreporting. It can be underreporting at best, not misreporting, right? What are those 6 clauses? Misrepresentation or suppression of facts. And department normally tries to fit everybody here because this is very widely worded, no? Misrepresentation or suppression of facts. They will say you have given me misrepresentation of facts. Unfair. And you will have to argue on this that this does not amount to misrepresentation of facts in my situation. So depending on a factual position, one will have to make out a case. First is this. Second is failure to record investment in books of accounts. Okay. Failure to record investment. If I am having an investment which has not been recorded in my books of accounts, then it can lead to misreporting of income. Now here also, I feel that again this clause is redundant to my mind, considering the fact that there is one 271 AAC. 271 AAC, as I said earlier, 69 to 69A, B, C, etc. It takes care of those cases where I have made some investment but not recorded in my books of accounts. So therefore, in all probability, if I've done that, then I'll be governed by 271 AAC, not by 270A in any case. So therefore, falling under 270A9 does not come to my mind. It can come in only one situation, and that situation is that I have not recorded investment in my books of accounts, but I am able to give the source of it. I am able to explain the source of it, right? Something similar to 270A4, where I said that I spent in my wedding in the family, but the source was connected to the earlier year's undisclosed income. That is how we can connect the dots, and that is how we can make it non-redundant. Otherwise, this becomes redundant to my mind, right? Failure to record investment in books of accounts. Claim of expenditure not substantiated by any evidence. This is also something which department invokes very frequently. Claim of expenditure not substantiated by any evidence. When I say any evidence, do I mean that do I have to maintain evidence for each and everything? I am going to travel by rickshaw. Do I need to have evidence? Do I need to have vouchers, receipts from the rickshaw driver? Can I do that? See, as I said, illogical things and absurd things the courts will never accept, and therefore, if the assessee does, the court is not going to accept. Similar situation, if the department does, the court is not going to accept. So they may try to say that, okay, you not produce the vouchers or evidences, the receipts. It is not possible. You can do what is possible. You cannot do what is impossible. What is normal practice, right? If I'm traveling by Uber, I may be having some, that receipt might come. That is a different story. If I'm traveling by rickshaw, if my employee is traveling by bus, is he required to maintain those bus tickets and produce at the time of assessment? These are crazy things. These are not expected. And therefore, no reasonable authority will accept that, will force this type of things on you. So please don't get worried about that part. As long as those evidences which can be having some evidence, such expenses which can be evidence, professional fees, contract commissions, etc., contract payments, where there can be some evidence, there can be some contracts, there can be some documents. Yes, if you are able to substantiate that, and if you are having your internal vouchers, nothing like that. But if I feel that even if you don't have internal vouchers, even then probably you will be able to say that no, these are routine things. It is not something where I am required to maintain those vouchers, and therefore don't take me to that level. You will be justified, probably you will get some justice. But as I said, and we and Manish Bhai were discussing before the break, in between the break when we met, that litigation is going to reduce. That is what Manish Bhai felt. I really feel, friends, that litigation is not going to reduce after this 25 Act also. I'm digressing, but for 1 minute only. It is not going to reduce, it is going to multiply. And when we travel down further, we will see. Today we have seen what level of litigation, and they are going to multiply only. It is not going to reduce. For a person like me, till I retire, my life is secured, I'm sure. Sufficient amount of litigation is generated by department, and I can not only earn my bread, butter, the cheese and jam also on that with that. I'm sure. Okay, coming back to this. So, claim of expenditure not substantiated by any evidence, such type of things will not be accepted by department also, right? So please don't get too much worried about it. Recording of false entry in books of accounts. This can amount to misreporting. So if I record false entry in my books of accounts, I can be having a difficulty. What can be those entries? Bogus expenses. If I'm recording bogus expenses in my books of accounts, and this is also invoked many a times, if I suspicious dealer purchase, bogus entries in my books of accounts, if I record, then yes, it can lead to misreporting. No grievance on that. If the person is doing this type of chori, then he should be suffering it. Then nobody can have any grievance on that, right? Bogus expenses like that. Or maybe, does it also mean that if I have debited my profit and loss account by an asset, I have purchased a laptop, say for example, and I, instead of claiming depreciation, I debit to my profit and loss account. Do I fall into that recording of false entry? Probably yes. This can also be a false entry, because by false entry we don't only mean that the entry should be bogus, the classification, the manner in which the entry should be recorded. So if a capital expenditure is debited to profit and loss account, probably yes, there can be a case of misreporting of income, right? Failure to record any receipt in books of accounts, very important. So if I am a professional, let us take our own example. I am taking some money from clients in cash for my fees. If I'm caught, unless until caught, to quite attention, right? If I'm caught and it is found that yes, there was a receipt which I have not recorded in my books of accounts, then yes. But please also mark the words having a bearing on taxable income. So that receipt should be having bearing on taxable income. If I am having my father has gifted me 10 lakh rupees on my birthday, right? And I don't record in my books of accounts. I am not maintaining my personal books of accounts separately. Then nobody can tell me that, look here, this is a receipt. Every receipt is not income, right? This is a fundamental principle which you understood when we started our income tax learning. Very first, section 5, section 4, that time we understood that every receipt is not income, correct? So if such receipt is there, which I have not recorded in my books of accounts, I cannot be said to be misreporting. Having a bearing on taxable income, right? Unless and until it is like that, there cannot be a bearing on taxable income, and therefore gift, loans, so on and so forth, right? Agriculture income. Failure to report an international transaction or deemed international transaction or specified domestic transaction to which TP provisions apply will amount to misreporting. These were the 6 clauses in 270A subsection 9. This 6, if you are falling under this 6, as I am repeating, only and only then you can be said to be misreporting, not always. There is one clause G, the 7th one, which has been added in section 439 of the 25 Act, and which creates all the problem. So I told you that they removed that 443, 271 ASC corresponding 443 in 225 Act. They have removed that. They have omitted that even before it came into existence. By the Finance Act 2026, it has been removed. Backup provision, they shifted it to 439. So from in 2025 Act, this is going to be a difficulty. Instead of 271 ASC, they have brought it under the main provision 270A and 439 in that section, right? And the impact is very severe. We'll come to that. I'm reserving it for timing. When we come with example, it will be better. Small comparison between 1C and 270A, that's okay. I think we can skip this. Right. Yes, please.
Very balancing corporate entity, take or individual, is under tax. During the assessment procedure, suppose some disallowances are made, but while the balance sheet, if the AO comes to know that there are some jewelry, unrecorded jewelry or undervalued jewelry, it does not appear in the balance sheet. So those, because we practically what happens, it becomes difficult to quantify the jewelry for individual balance sheet, especially when they are
Coming from the earlier years.
Earlier years or from gifted or on marriage, during marriage, over period of times. And you value it down to the years after 5, 7 years, 10 years, even after going to valuation, but we are not supported by the supporting bill sources.
Yes.
Unless they are bought from the market.
Yes, yes, correct.
In such a situation, protection of can you invoke 270A9 on the second clause, the investments.
Failure to record investment.
Yeah, they are only from gallery or gallery.
See,
individually.
correct. So I understood your question. To my mind, failure to record investment would mean where there is a, just because I have not recorded investment. See, I got married in 1999. So in 1999, if I have purchased some jewelry, today it is not recorded in my books of accounts, right? Does that have an impact on my income? So even if he invokes, he cannot, according to me, even if he invokes for 1 second, let us accept it. Is there a tax? Is there a tax on that? Tax is fundamental. If there is no tax, there cannot be any penalty. It will be pure academic exercise for him. The useless, futile exercise which he does, he wastes his time and my time. Nothing more than that. Right? He cannot do that. Section 69 says that for invoking that unexplained expenditure, etc., in my case, the investment should have been made in the current year. Even if it is 1 year old. We are in the financial year 26-27 today. Even if my investment is made in financial year 25-26, so far as tax year 26-27 is concerned, he cannot touch me. He cannot touch me. And therefore, say for example, 69 में बहुत दफा ऐसा होता है, when the addition is made for fixed deposits in the bank, and if you are able to explain that this is out of maturity of my earlier fixed deposit, in March 24, I have made investment. March 25, it got matured. I have just renewed it further and going further, right? That investment is made there. If he wants to tax, he has to reopen that assessment. Only investment made in the year. All other things, he cannot go into the history. It will not be having addition also. Forget penalty. So when penalty is not there, then whether it is 9, 271 ASC, normal 270A, we are not worried. I hope I have. You are satisfied?
Addition itself is not sustained.
No, addition itself is not there. Yes, sir.
The schemes following the presumptive.
Yes.
How to deal with this failure to record investment in books of account?
Because it's not required to, right? By definition under 44 AD, is not required to. Therefore, in such a situation, I would feel this clause will not be applicable. It is redundant insofar as that particular assess is concerned.
So I do not correlate my investment with the quantum of income is.
Now that takes us to a different segment of discussion. We'll do that. See, presumptive taxation, 44 AD, to my mind, first of all, is a double-edged sword. 44 AD allows you to offer income at a particular rate, 8%, 6%, whatever it may be. 44 AD is 50%. But please appreciate that you are also allowed to offer or such higher sum as you may have actually earned. So today, if I am earning as a professional, I am earning 75% of my gross is my net, suppose. And if I say that no, I am paying 50% only. And in future, when I acquire a property, I said that, oh no, ये तो मैंने professional fees से कमाया. Nobody is going to accept that. No one is going to accept that. What prevented you declaring higher income? You are supposed to come with clean hands. You are not supposed to play with the things, right? If I do that, then certainly nobody will accept it. Similar situation for 8%, 6%. So if you capitalize, if you want to capitalize, loosely speaking, अपने language में, if you want to capitalize higher amount, you have to show higher amount. Just because 6% is offered or 8% is offered, you are not immune from the entire thing, right? That is a presumptive taxation. That is a presumption. When I say that 8% is my net, by definition, I presume that 92% is my expense. Is it not? By definition, by logical understanding. If I say that 92% I have already spent, and today, after 3 years, I said, no, अरे वहां पे तो मेरे पास इतना था, मैंने यहाँ से. No,
I'm not maintaining books of the profit.
so from on that perspective, because I'm not maintaining, so failure to record books of investment in books of accounts cannot come. But if you want to take advantage of that by way of capitalizing your asset, if you want to show your source connection to that asset, that presumptive taxation, that nobody is going to accept. To my mind, 44AD and 44ADA, both the sections are hopeless schemes. I have not advised any of my client to file. Even if they are filing it that way, we strongly recommend them that you prepare a personal balance sheet, keep it with you, and if your income is on a higher side, please be graceful enough and pay it. If you want to take advantage of 44AD, then be prepared that all the 92% is gone away from your books of accounts forever. Is gone away from your books of accounts. Then tomorrow don't come back and tell me that no, this is my income, this was my receipt, now I'm buying a property, now I am doing this, now I'm traveling foreign. Forget it, sir. It is not going to work like that. Yes.
Sir, what about the assessment for the EC, redirect the value and the
Yes.
increment, whether it's a cost or
Correct. Very good question. Again, 50C is something where if you don't have, you have not offered. Department tries to put it under misreporting many of the times because they say there is a addition and this is misrepresentation or suppression of facts. Now, I would feel if you want to stay protected in that, what you should do, or maybe failure to record investment में तो नहीं आएगा, but first वाला, right, misrepresentation or suppression of facts. What I would suggest and recommend is that when you file the return of income in the capital gain schedule which we prepare, and my filing of schedules returns, I'm slightly weak on that. I don't do in my office, but just I have understood from my team and everyone. There is one column. In scheduled capital gain, there is one column when you sold immovable property, transaction value and stamp duty value. Right? And thereafter, when you put that, automatically the utility takes the higher figure. But I would strongly recommend that you mention both, and then if your utility permits, then go back and change that to the original transaction value. By doing that, you have already made a full and true disclosure of the facts. And therefore, nobody can say, see, in 271C regime, 271C regime also, we had a situation where the person has made a full and true disclosure. The courts have always been saying that no boss, no penalty. He has made disclosure. There are decisions of in 271C, and I'm very fond of one decision which has come to my reading, where the court say that there are two ways to give you the things. The tribunal, rather, it was a tribunal, Mumbai tribunal, but a very learned member, a good decision. He says, if I'm supposed to give you some sweet, I can either prepare the sweet on my own and give it to you. Have it. Here is the rasgulla, have it. Other way is I am giving you all the ingredients to prepare the sweet. Paneer, sugar, oil, whatever XYZ required to prepare that. I am giving it to you. And now you are having the possibility to prepare the sweet if you want, as per your taste. I am giving all the ingredients. Both the situations are same to our mind, therefore should not amount to concealment of income or furnishing of inaccurate particulars. So in such a situation, you should mention in that CD schedule. Having said that, I am aware of the difficulty which comes where the utility is going to take up that directly. How to get protected then? If you don't want to do it, you don't mention that stamp duty value in the return so that your original figure goes. Your transaction value is 1 crore, stamp duty value is, say, for example, 140. You want to save yourself? Fine. Put 1 crore, get your return file. Next day, write a letter, or same day, write a letter to your jurisdictional officer. Even without waiting for screen notice. Write a letter to your assessing officer saying that I have sold a property, transaction value is this, stamp duty value is this, but I am having a strong conviction that the fair market value of the property is not the stamp duty value, and therefore I have not offered them. This type of letter, if you write to your jurisdictional assessing officer and take an acknowledgement from him, you are for your lifetime protected from penalty. This is a way in which one can do it. This is the only way you can defend yourself. Do it. It might invite a scrutiny. It will invite a scrutiny. But Nidhi madam scrutiny तो ऐसे भी आएगा. क्यों आएगा? क्यों आएगा? रजिस्टर के पास से information तो जाने वाला.
We can support this with a value report also, isn't that?
Yes. Value evaluation का report दे दो साथ साथ में. Then what will happen? It is estimation. It is estimation between, there is two view between two different values. DVO on one side, assessing officer on one, assessing DVO on one side. That is okay. This is a gray area. Wherever there is a question of valuation, today I might say that this mic is of worth 5,000. You may say, no, no, it's 500. That is a perception. That's a perception. That's okay. But I am giving full and true disclosure. मैं सब कुछ दिखा रहा हूँ, मैं कुछ भी छुपा नहीं रहा हूँ. In such a situation, ज़्यादा से ज़्यादा scrutiny आएगा, तो ऐसे भी आना है सर. Should not be a problem. This is the way you should handle it actually. Yes. Under 50C, by the way, under 271 1C regime, we had a situation where, similar situation in 271 1C regime, we had got the first decision which came to my mind, which to my reading at least, was one Mumbai Tribunal decision in the case of Renu Hingorani, where the tribunal said that no, this is ultimately a question of estimation, penalty cannot be levied in 1C regime. Those principles, those, the fundamental principles like this have not been thrown away. Have not been thrown away. Only you will have to explain that now today, in today's situation also, those principles are having equal binding force. It is not that it is thrown away. Right? That way 61 to 25 Act, so much of jurisprudence, capital versus revenue, अगर आप देखने बैठेंगे, so many decisions of Supreme Court have been there in 61 Act. Do you need to say that by stroke of one pen, the parliament has changed 61 to 25, all those literature is now dustbin? No, it is not so, right? Right. Any other points on this, on subsection 9? Fine, small comparison, will not spend time on this. Now we'll go to some of the issues. I have taken sufficient time on the theoretical part. Let us go to the issues. First and foremost, under 271 1C regime, I think all of us has taken advantage or used this in some manner sometime in our life. See, 271 1C में था concealment of income or furnishing of inaccurate particulars of income. Now it is all practical sessions which will start, right? दोनों था. Most of the time in the earlier period, now later on they become smart, but in the earlier period, the assessing officer was not striking off any of the two. Striking off नहीं करते थे. And there was a standard cyclostyle printout आता था जिसमें दोनों लिखा था. You have furnished, you have concealed the particulars of income or furnished inaccurate particulars of income. ये standard cyclostyle note आता था, sorry, notice आता था जिसके में दोनों में से एक भी strike off नहीं होता. Now in such a situation, the courts have consistently taken a view that 271 1C, the show cause notice is the document. Under any law, when you are charging somebody with a penal provision, you should tell him, boss, what charge, for what charge you're suffering, right? Suppose a person is drunk, he drives, he breaks a signal. The constable can catch him for two things, breaking the signal and also for drink and drive. He should be told very clearly. तुम पिए हो इसलिए तुमको पकड़ रहा है या सिग्नल तोड़ा इसलिए पकड़ रहा है? किसका फाइन लगा है? Right? You cannot in general levy the fine or penalty or anything. You have to be very clear whether it is A or B. If it is not so, then you cannot. Your entire further exercise are futile. You are not having the permission to go further. This is the jurisprudence available under several civil laws also and our tax laws also. The first decision, which is of substantial value, is in Manjunath Cotton Mills, where the Karnataka High Court rather has taken a view that if there is no such striking off, then forget it. They cannot. And this decision has been used by so many of us, so many, Manjunath Cotton Mills, right? So many, various cases. Then, there came a situation where in the assessment order it is written. Now, assessment order is mentioning that addition is made, penalty is initiated for concealment of income. Assessment order says so, but show cause notice may again the same mistake is continued. The department started arguing that, look here, insofar as show cause notice is concerned, it is only a subset of the assessment order, and therefore what is mentioned in assessment order coupled with show cause notice, you have to read together. You cannot throw away assessment order like that. Assessment order is a value. So that value, that explains you what is the charge on you, and therefore you are not supposed to take this argument. That is what the department started. Fortunately, the Bombay High Court in the case of this Mohammed Farhan Sheikh, has taken a view that insofar as penalty is concerned, show cause notice is the document. And while doing this decision, they have discussed at least, I think, 70-80 decisions they have discussed of various courts, tribunals. A huge literature is available. Mohammad Farhan Sheikh, if you read, you will be really thrilled to read. If you are having the interest to read the arguments and counter arguments, this decision is something which you will be fond of. You will be loving it, right? 434 ITR page 1. The Bombay High Court finally said, after considering all those 80-90 decisions, the form I don't remember the numbers. There are good amount of literature. The Bombay High Court said that insofar as penalty proceedings are concerned, and penalty proceedings and assessment proceedings are separate and distinct, as far as penalty is concerned, the show cause notice has to speak for itself. I am not supposed to even care for your assessment order. Let it be thrown in gutter. Show cause notice is the one. So now, if you are posed with such a situation, this can come to your rescue. This has been also accepted by Supreme Court in a later decision in Golden Peace Hotels, where original decision emanated from Bombay bench, Goa bench of Bombay Court, and it reached Bombay Supreme Court. Supreme Court has also confirmed that. So it is a concluded view. Why I am saying this? 271 to chala jane wala hai. Chala gaya hai rather. Why I am saying this? The same principles are also relevant in 270A, and the same principles are going to be relevant in section 439 of 2025. Right? Position under 270A, following this same analogy, in the case of Chandelier Electric, etc., Delhi High Court has taken a view. Similarly, in Prem Brothers, similarly, Pune Tribunal in Chakradar's case, they all have taken a view that now the limbs are different. Earlier it was concealment of income and furnishing inaccurate particulars of income. Now it is underreporting of income and misreporting of income. So if none of the two is struck off in the two, then sorry, no penalty. So in case if you are having this situation where the penalty notice is not mentioning any of them, then that is the dead end for them. They cannot proceed further. End of the story, right? Failure to specify the specific clause. In fact, this is what a Jaipur tribunal decision, very important. What it says, though it is a tribunal decision, it has a strong persuasive value and therefore you can use it. What it says that misreporting, insofar as misreporting is concerned, आप खाली misreporting बोल देंगे तो नहीं चलेगा. You have to also explain in your show cause notice under which limb of subsection 9 A, B, C, D, E, F 5 है, अभी 6 होने वाला है, वो अलग बात है. A, B, C, D, E, F ये 6 में से कौन सा, whether it is 9A, 9B, 9C, what you have to give that to the assessee. If you are not mentioned in your show cause notice, then you are out. You cannot take the penalty. This is a Jaipur tribunal. Penalty can be initiated only during the assessment proceedings. I think during a proceeding that we have discussed, there was a case where, in the case of Jaipur tribunal, Dharumal's case, Buramal's case rather, where the CIT appeal was trying to levy penalty where there was no appeal pending before him. The tribunal said, no, you don't have any jurisdiction, get lost, right? Notice issued for underreporting, penalty cannot be levied for misreporting. This is there in 271(1)(c) regime also. The same concepts are there, which is going to continue in 270A and 439. What it says, you have initiated on A. Taking our use example, drunk driving, right? The person is drunk, he breaks a signal. He has been caught for saying that you are breaking a signal. Tomorrow, when the matter reaches the court, you cannot say that, no, now I want to change sir, the PR with. No, your FIR should say that, right? So if the initiation is on point A, but conclusion is on point B, courts are saying no, not all, right? This is the Delhi Tribunal, Ashok Kumar Gupta. There will be many decisions. See, on all the concepts, I have put up some of the propositions and some of the decisions. These are, take it as a proposition. I am sure this is not the only decision. There may be hundreds and thousands of decisions on each subject, but I just put up for your reference, right? So these are only having reference value. You may be having many literatures on this. बहुत सारा available. In today's time, decisions every day, I think at least not less than 250 decisions are coming from different tribunals and courts, right? So it is not possible for anyone, and it is not required also to mention everything. Many decisions are available. I am just putting some, which is noted by me. Okay. No penalty is to be levied in the case of bona fide claim. So this again, see, bona fide claim is a very important thing, which is there in the 270A6 first clause, as I said, and there are some decisions, and इसके कुछ facts भी आप पढ़ लेंगे तो आपको अच्छा रहेगा. Sashan Power as well as Adinath Vandekar, where tribunals have taken a view that if at all there is a bona fide claim, I have made a claim in a bona fide manner, then penalty cannot be levied, right? Change of head. This is very frequent. I am offering income under the head business income. Department says no, it is capital gains or converts. I am offering as a house property, department says business income. I am offering at business, department says house property. In such a situation, what will be the impact? Say for example, I am claiming house property and department makes it a business income. The 30% standard deduction will be lost because now it is business income. I am not challenging it. I am accepting, suppose. Now whether penalty can be levied for that 30% in that insofar as the 30% is concerned, the answer is no. The department may invoke, but the courts are saying in Mumbai tribunal, and there are so many decisions, as I said, where they are saying that ultimately it is a change of head. Income, see, all the materials were available before you. See, the underlying principle is that the material was available before you. What is the amount of rent? You were aware. What is the amount of deduction? 30%. This is available to you. This is something you will not honor something, and therefore you will not be getting a right to levy penalty on that. This is what it is. Penalty not mandatory. AO may direct. This is also one important discussion in this particular judgment of DC Prudential, where it is said that ultimately it is a discretion of the assessing officer. And when it is discretionary, the discretion has to be exercised in a judicious manner. It cannot be decided in an arbitrary manner. That is what the Mumbai tribunal has said, right? So change of head, no penalty. Vansi के region में भी बहुत सारे ऐसे judgments आपको मिलेंगे. So many of them. Ad hoc disallowance due to lack of supporting evidence does not result into misreporting. The one we were discussing, the rickshaw wale ka voucher, etc. Right? Cannot be there. There cannot be any disallowance for that. Addition made on based on DVO, penalty cannot be levied. Sir, the question which you were asking, 50C, right? We have got this direct judgment of Pune Tribunal which says that the estimation made by DVO, Departmental Valuation Officer, आपके example में stamp duty value था, but more or less the concept remains same, right? Penalty cannot be levied. Pune Tribunal. No penalty can be levied where assessed income does not exceed return income. No, this was one different case before Gujarat High Court. I will get it, sir. पूरा आपको भेज देंगे, but anyway. 147 taxman.com 333. Yeah, no penalty can be levied where assessed income does not exceed return income. This was a case, a completely different case, where what happened is before this Gujarat High Court, the person sold some property. There was a search at some other's place, the buyer's place. In that, the buyer accepted that yes, there is a own money. The buyer admitted, I have sold my property. But before I file my return of income, I was aware that उसके यहाँ पे कुछ लफड़ा हो गया है, and उसने admit कर दिया. So what I did when I filed my return of income, I included that as a part of my capital gain, even the own money. I included that as a part of sales consideration. I completed my capital gain and offered the tax and finished off. So Gujarat, the AO in that case said that look here, because there was a search at the premises of X, because of his admission, now you are disclosing. Otherwise, you would not have disclosed. And I have reason to believe that you would not have disclosed. Why? Because ultimately, वहां पे सर्च नहीं तो आप नहीं करते थे. आपको करना होता, दिखाना होता जेन्युइनली, तो आप क्यों एग्रीमेंट में नहीं डालते उसको? आपने नहीं डाला मतलब देयर इज अ सीरियस इंडिकेशन दैट ये आपका उड़ाने का टारगेट था और ऊपर से उड़ा देने का टारगेट था. यू विल नॉट बी डिस्क्लोजिंग इट एंड देयरफॉर आई विल लेवी पेनल्टी. Gujarat High Court said, where is the mechanism? Where is the possibility for you to do that? Compare underreported income. Underreported income is return income minus assessed income. Return income itself is that the same is assessed income. How can you come and levy penalty? Get lost. Right? Very clear. So this type of situation really emerged in life. I am putting it in the this one. Many times it happens. किसी दूसरे के उधर सर्च हो जाता है, उसकी वजह से हमारे उधर आग लग जाती है. तो ये होता है. But if I have already offered, then forget it. You are absolutely protected. I mean, there is no rocket science behind this, but this happens in real life. Therefore, right? Some value, some reference value is there. Yes. For misreporting of income, there should be underreporting first, which I said. It is a subset of underreporting. Unless and until it is falling into subsection 2, the situations, it cannot travel to misreporting. In the case of Chennai Tribunal, KAG India. Difference in interest income. Now, these are some concessions by the courts tribunals. Difference in interest income arising due to delayed reporting of interest. So what happened? The person could not include that interest in the income for the reason that उसके डिडक्ट करने टाइम पे TDS रिटर्न नहीं भरा तो 26 years में रिफ्लेक्ट नहीं हुआ तो उसने नहीं बताया. In such a situation, a relaxed approach, it's a concession in fact. Right? The tribunal has taken a concessional view, Nagpur tribunal, saying that in such a situation the person was having a bona fide reason not to include and therefore no penalty. Right? Bona fide error committed by accountant, I think yes, fine, no penalty. Of course, these are all facts, so you know these are all factual things. Some concessions, I'm just bringing out some of the concessions which have been given by the tribunal at various places. Under 270 is liable to be set aside, yes. Now this is very important. Patna High Court. See, many times this situation comes in life that my penalty appeal is pending, or my my quantum appeal is pending. And I mentioned always this happens, right? My quantum appeal is pending. I mentioned to the assessing officer, look here, my quantum appeal is pending, therefore please don't levy penalty. Then the person levied the penalty despite of the fact that quantum was pending. The Patna High Court said, no, penalty order should also be set aside because it has not attained finality. Therefore, you cannot levy penalty on something which is still lying in the womb of future. You cannot levy penalty on that. It is not certain today. So please don't levy penalty. If you have levied, they send it back. That also is cancelled. It will be decided only after the quantum appeal is decided. This is what has been decided by Patna High Court in the case of Takshila Education Society. At the same time, please be mindful of this Kerala High Court decision. If just initiation, if it is just initiation of penalty proceedings, you cannot be aggrieved by initiation. In this case of Jiju Joseph, the person went to the High Court on the show cause notice. Sir, इसने मुझे show cause notice दे दिया, my appeal is pending. So the High Court said you cannot come in writ petition. The AO cannot be precluded from initiating of the penalty proceeding. That is his power. Initiation is allowed. Completion, levy of penalty not allowed when the appeal is pending. But initiation certainly is having right, and that is the only thing which he can do. If you wait till the completion of appeal, then it will become time barred. Then you will say that no, now no proceedings are pending before him. It has become time barred, so that is not permissible. So just don't rush to the court for each and everything, right? The message to be taken, because people are fond of litigating at times. I have seen many people, and some of my clients also have seen. They will ensure पहले 3-4 notice तो सर drawer में डालने का होता है. This is the approach. पहले 3-4 नोटिस तो ड्रॉर में डाल देने का बाद में देखेंगे जब शोकोज नोटिस आएगा, फाइनल रिमाइंडर आएगा रेड लेटर में, और जो पहले पुराने दिनों में आता था, अभी तो कंप्यूटराइज्ड है सारा, तो जब रेड लेटर में फाइनल नोटिस जब लिखे तब उस दिन जाएंगे देखेंगे क्या करने का, तब तक तो चलता है, तो वो बोलते रहते हैं, इतना ज्यादा सोचने का नहीं. They are perpetual litigator. If that type of thing is there, don't do that. That brings us to very important concept of 270AA, and I think I'll try to make it in a simple manner rather than going into small because we are having some shortage in time. But anyway, so 270AA immunity, this is very important, as I said, right? You can get immunity provided 2 or 3 conditions. A, you are not willing to litigate. You're not filing appeal, fine. And you are paying tax within the time prescribed. This is a win-win situation for everyone as such. Why? Because you will not litigate. ठीक है, बढ़िया है. Department will get its revenue on time. Department will not have to spend time on litigation, passing your appeal orders, etc. Good for everyone. Beautiful scheme, and you will be paying. You will not be in fact required to pay anything, but you will be required to only pay tax and interest, whatever is decided in the assessment. You will pay it and forget it. Go home happy. That's all. The only problem starts, and the puncture in the vehicle starts now. The puncture is that they said that for misreporting of income, sorry, you are not allowed. Okay. Before that, yeah. So application to be made within 1 month, you have to file form 68, etc. Blah blah blah. AO can grant immunity. AO shall grant other immunity. Immunity is not to be granted where the penalty is initiated for misreporting. This is the biggest puncture. So they say that only for underreporting of income this is available. For misreporting of income, you cannot have immunity. Now the problem at the ground level is different. The problem at the ground level, we have seen that in all the cases, we have seen 270A9. Before a couple of slides, you have seen that only 6 parts are there. अभी वो 7वां आने वाला है, ठीक है. ये 7 के अंदर ही करना पड़ता है, otherwise you cannot say misreporting. The AOs are writing in all orders, all, and I feel almost all. कभी rare chance में ऐसा order देखते हैं जहाँ पे नहीं लिखा होता. Otherwise they said this is amounting to underreporting in the form of misreporting. Now because of this one nonsense sentence in the assessment order, the person his door to immunity are closed. His door to immunity are closed. He cannot do. Because of this one sentence, he has to litigate in the quantum even if he does not want to. Right? And that is where I say that the life of a litigation professional is great. Great. Not good, it is great. Right? What is this? They are saying in one line, it is in the form of misreporting. ऐसा नहीं है भाई, 278(9) में नहीं पढ़ रहा है. कौन सोचता है? लगा दिया, ठोक दिया. जाओ, litigation करो, खत्म हो. One more difficulty. You cannot file appeal. So technically speaking, I can file appeal not only against the addition, but suppose I want to get my classification change from misreporting to underreporting. I am only having that intention. Only that intention in mind. My classification changes from misreporting today to underreporting. If I do that, I'm happy. I'm happy. I'll be paying 50%, I'll be getting immunity, whatever, I'm happy. The difficulty is that once you file appeal, your immunity doors are closed. Even if you file the immunity appeal to change the classification, forget addition. I am on addition, I am accepting chalo addition accept kar liya maine. But if I do this, my doors are closed. So this was the difficulty, right? We brought out this to the notice of the CBDT chairman, and we had one-to-one meeting with CBDT chairman when we went from the chamber side on a couple of occasions. 2 or 3 times we have pointed out this. Every time this has been appreciated. We discussed this before the select committee of parliamentarians and MPs who were there in the at the time of this Finance Act 2025, Income Tax Act 2025. So that time also we brought their attention. Everybody appreciated, but nobody ultimately, decides the manner in which it should be decided. And that is my heartburn. See what they do. We have told them, look here, I am told that if my immunity is rejected, subsequent slide is there. If my immunity is ultimately rejected, I make an application, my immunity is rejected, then I will be having time of 30 days to file appeal. Initially, I have to forget the right of it. This is the way in which immunity works. I have to forget my appeal filing. I have to make an application for immunity. The AO rejects my immunity for whatever reason, XYZ. He rejects it. I am given 30 days time to file appeal now against the quantum. Why? Because he is rejected. आपने मुझे जब मारना ही नक्की कर दिया तब ठीक है मैं litigate करूँगा. Now in that situation, that concession is given. So what we suggested to the CBDT chairman is that if the person is filing appeal only for the sake of change of classification from misreporting to income to underreporting, permit him to file the immunity application after the appeal is decided. Do that. Not filing appeal or immunity rejection, वहां पे आपने दिया है, यहाँ पे भी दे दो एक, so that your things take off. This good scheme is not taking off. I told them very clearly, sir. Ground level पे हमको पता है नहीं हो रहा है because many a times we see, and I was slightly candid in my approach. I said, so many a times we have seen that the AOs are mentioning this one line and this creates all the problem. He was double candid. He said, Mr. Vajani, you are very kind. You are saying many a times our AOs are saying. In fact, all my AOs are doing every time. He had very openly said my AOs are doing every time. And therefore I said, sir, look at the purpose, look at the object of the scheme. It is not taking off. So this is a mechanism which we suggest that after I'm not challenging the addition. Addition, let it be. But I am filing appeal only and only for the purpose of change of classification. Thereafter, permit me to go for immunity. वहां से मेरा order आ जाएगा, CIT बोल देगा, yes, classification is wrong. I am eligible to immunity. Now give me the immunity. इतना करना है सर और कुछ. They said, okay, no, this is a good idea. We should think on this. Note down कर लो. उनके सारे juniors बोला note down कर लो. And when the assessment came, when the final 2026 में उन्होंने amendment किया, they have now given for misreporting also. They have given the possibility of immunity for misreporting also, but rather than giving in the manner in which we have suggested, they said that now you will have to pay 120% tax in lieu of penalty. So ultimately, it ends up at a double cost, in fact, more cost than what was otherwise available, right? So this is the way in which, unfortunately, they have implemented. Yes. Okay, so sum and substance of the immunity provisions I have accepted. Challenges on account of immunity not available for misreporting I discussed. An amendment made by Finance Act 2026. So in one slide, one slide was there. I have discussed all the three. Legislative intent is this: reduction in protected litigation, fast track settlement of issues, and speedy collection of demand. That's fine. These are the good objects, but I don't think that any of the objects have been achieved. Whether any of these objects are achieved, answer is to my mind no, and therefore all the problems remain. Issues, some of the issues in immunity. Can the assessee avoid penalty when I'm under assessment? I offer on my own. मेरा assessment चालू हुआ, मैंने खुद ने on my own I went ahead. Can I say that this is not amounting to misreporting? Because why? Because I am making full and true disclosure now. I am having a bona fide view. I am making a full and true disclosure before the AO. Can I avoid the penalty or the thing which we are discussing about 50C, where I have already written one letter to the AO later on? It is not there in my written, but later on I have mentioned, can I avoid penalty by saying that no, this will not amount to misreporting at least. It may amount to underreporting, but not misreporting. Can I take a view? That is a question which I am putting before all of you. And my feeling is that yes, you can. Yes, you can, provided you have made the disclosure before it was detected by the department. Right? It is the time which is crucial. Before that particular issue cropped up, 142.1 issue में आपको 142.1 के notice में आपको already questions पूछे गए, and then you are pushed to wall, you say surrender. Surrender नहीं करते तो ऐसे ही मरने वाले थे, right? वो situation में surrender की value नहीं होगी. Similar provisions were there by way of a judge-made law in the 271(1)(c) regime, where the courts have taken a view that unless and until it was detected by the department, there cannot be a penalty. The person has came on his own and disclosed. So what is the problem? Take it and be happy about it. Don't give you a penalty. The fundamental principle here is that guilty person should be hanged and others should be spared. That is the purpose. So yes, if it is in such a manner, then yes, you can do that. Some important judgments, this Chambal Fertilizer, Rajasthan and Mumbai Tribunal, both of them are good judgments, one can read. Time is essential. Actually, if you are delaying it and only when you are pushed to wall, if you declare, then I think certainly you will not be having that argument available to you later on. Penalty not specific in limb, I think we already discussed some of the judgments, Schneider Electric, etc., GE Capital. Yeah. Can the penalty, this immunity order be kept on hold for a long time? Today, the prescribed time is 1 month or 3 months. 3 months is now, earlier it was 1 month. Once I have made the immunity application, can it be kept on hold for a long, and in the meantime, penalty order passed? ऐसा अगर कर लिया, then there are decisions which say that this Delhi High Court Nirman overseas, which says that you cannot do this, not permitted. AO must grant immunity unless it is a case of misreporting, etc. That's fine. So how much time do we have? Okay. 5-10 minutes. Okay. Then in that case, I'll be slightly rushing up. Please bear with me. And this presentation is there. Opportunity of hearing is, of course, to be given. Without opportunity, cannot be done. Some decisions there. This is fundamentally OD ultra partum. In order to immunity, Chambal Fertilizer, I think we already discussed. Which specific limb is also there, that has to be mentioned, as I said. Mere mentioning of misreporting is not sufficient. I had discussed this earlier, but if you want some authority on that, because nowadays, when you go to tribunal also, when you go to anybody, there's a judgment hai kya? Judgment hai to leke aao to फटाफट कर देंगे. Judgment leke aao. So judgment, everybody wants everything ready on the platter. So if you want to give something on platter, this Prem Brothers 142taxman.com 38, right? Disallowance under 14A of higher amount. I think somebody was asking about 14A. So this probably answers that. This is very important, and therefore let me spend 1 or 2 minutes on whether the delay in filing this immunity application. I am supposed to file the application within 1 month from the end of the month in which the order is received. If I don't do that, is it the end of the road for me for immunity? That is the question. Fortunately, the courts are taking a liberal view in this matter. The tribunals are taking a liberal view in this matter. They say that as long as you made the payment of tax, and as long as you have not filed the appeal against that assessment order, it is a right which you acquired to get immunity. In a way, substantial compliance is done. Only procedural part of filing form 68 is remaining. Therefore, we will give you immunity. The AOs don't give, but the courts and tribunals are giving. Fortunately, a liberal view is being taken. One can take recourse to this Natarajan's case and some other cases which are there. Nirajita Mitra was also there, Hyderabad. Whether the AO is required to pass order even if the application is delayed. In that order, in the Hyderabad tribunal, the tribunal said that even when the application is delayed, at least you are required to pass the order, either allowing or rejecting. When he does rejecting, he has to reject for reasons, and therefore he has to probably indirectly say allow, right? They say that there is no prohibition to the assessee not filing application even if it is belated, etc. Delay can be condoned. Yes, Jodhpur tribunal, again Hyderabad tribunal. Hyderabad tribunal has given a paragraph, detailed paragraph in this Mitra's case, where they say that the assessing officer and CID appeal, though it is not mentioned very clearly, they have inherent powers to condone the delay. Because 270AA, there is no mention of any power to condone the delay, but the tribunal has said that they have inherent powers to condone the delay, and therefore they should have done that. Delayed payment of tax might be slightly difficult because it doesn't, the substantive compliance is slightly delayed. But if it is couple of days, then I think the tribunal will come to your rescue. If it is huge gap, then it will not. And if there is a reason, say for example, somebody is not well in the family, hospitalized, etc., and you delayed by maybe couple of days, then probably they will come to your rescue. We are having a situation where the application not filed at all. Not filed at all. Case of Delhi Tribunal, Vishambar Dayal's case, where the person did not file the application. He was a 94-year-old person. He has offered something in return. Original return he offered. Then later on there was one judgment which came, which said that no, this income is not taxable. So he revised his return, saying that no, I am withdrawing this income from my computation. Now my income is less. That happened. Thereafter, one more judgment came, which said that no, this is taxable. So that person thought, okay, I have already withdrawn. Now in the assessment, he said, okay, you tax it, I am paying tax on it, and that's okay. He paid tax on it, but forgot to file the application. He paid the taxes in time. Looking at the conduct of the person, the Delhi tribunal said that the person is absolutely genuine person. He has, in the first return, he has offered. Second return, he withdrew because of the decision available on the subject. In light of that decision, he said that it is not taxable. Now the decision has again some different decisions come. The pendulum has moved from one side to the other side. Now in that situation, the person's conduct is not ingenuine, and he is agreed to addition. He has paid tax. What more you want? Therefore, allow him the immunity. Even if he has not filed at Form 68, the immunity was allowed. Very rare, but yes, why I'm bringing this? This, so your conduct is very important. If you can demonstrate your conduct is genuine, then I think more or less the things can come in your favor. Davat traders something similar. 68 not filed, but etc. That's fine. Can the person file 264 petition against the immunity order? Yes, answer is yes. This Haren Textile, Bombay Good. He cannot file 264 petition against the original assessment order. But if my immunity is rejected, can I file a 264 petition against that rejection of immunity? The answer is yes. There is a difference between the two. Right? I cannot litigate the quantum, but my immunity rejection, I can go to 264 and get it. Change of lien while deciding the immunity not permitted. So in your immunity application, when you are making immunity application, here is a case where originally it was on a misreporting. The person filed immunity petition. The AO said you cannot get because it is misreporting. The person went to the High Court in a writ petition saying that look here, he should have considered that this is not misreporting. It does not amount to misreporting. It is underreporting. So he should have allowed. The High Court said it, but in his order, original order, he has invoked misreporting. He is not having the power also to change it now. He is not having the power to change it now, and therefore his action is justified. What you should have done, you should have litigated in the appeal quantum, right? So therefore litigation is going to remain. Okay. This is what the High Court said. Now, how do we use this in our favor? This is an adverse decision as such, Kerala High Court. But how do I use it in my favor? Say, for example, a situation is converse. In the original return, he has said underreporting. I file immunity application, and the AO, and they are notorious, they can do this. They said, no, now there was a mistake in my original. I am saying now it is misreporting. And by definition also, if it is falling in the 270A9, 1, 2, 3, 4, 5, 6, even then you can take a recourse to this decision and say that no, boss, you cannot do what you have done. You cannot undo what you have done, and therefore stay with it, grant me the immunity. But in this manner, probably you can use an adverse decision to a favorable way, probably, depending on the facts, of course. 271 AC is, I think, small one which has been discontinued now in the Finance Act 26. Finance Act 26 has made 2 amendments, and I'm just closing it with this. In Finance Act 26, as I said, and that time I was mentioning that that clause G is coming in section 439. 271 AC 443 has been omitted, and now it is part of clause G has come in the misreporting part. 270A subsection 9, 439 maybe वैसा ही है. So what it says is, wherever there is an addition on account of 68 to 69D, it will be treated as a misreporting of income. You can take it immunity, but it will be considered as a misreporting of income, though you will be getting immunity. That is a different story. And therefore, the tax will be computed in this fashion. 200% plus penalty will lead you to 114%. I have made some rough calculations, and so just accept it as it is. 114%. So therefore, I feel that the purpose with which we went to the CBDT and telling them that give it the concession in this fashion, misreporting को भी इस तरह से avoid कर सकते हैं. They have done a completely misfire of the bullet and it has gone and hit at some other place. Right now it is 114%. If you see community, it can come down to 84%. The figures are given. I think I'll not spend time on that. And this is the one which I'll just spend 2 minutes and end up. Now we are told that any order which are passed after 1/4/2027. Any order which are passed after 1/4/2027, no matter to which year it pertains, we are told that it will be an integrated order of assessment and appeal. Assessment and penalty, sorry. Now it will be integrated. So penalty will also be levied in the same order. You will be allowed to file appeal and your penalty amount will be stayed. Penalty collection will be, no, penalty amount will be stayed. One second, I think I'm lost somewhere. Yes, no interest will be charged. Sorry, they said that no interest will be charged on 220(2) in respect of the penalty amount. What about the recovery? That we are not told. And can the first principle, can the assessment and penalty be a combined order? We are aware of so much of settled position where we are taught by the court that look here, both are separate proceedings. If I missed out to file some evidences during my assessment proceedings and later on I got it from somewhere, I can file those evidences again. I can make new arguments during penalty proceedings. All these things are going to be going. It's going to be in the court storage after this amendment. Very unfortunate amendment. There cannot be any sense in having penalty and assessment order together. We are told that ultimately the purpose, these are as per explanatory memorandum, eventually penalty has to be levied on the findings in the assessment order. And therefore additions made in the assessment subject to the status of final proceeding, and therefore to avoid multiplicity of proceedings. No, interest or penalty will not be required to pay. That's what we are told.
That's not penalty, but your penalty.
That is what I am having a fear. The way in which the language is mentioned in the unless and until CBDT comes out with some circular and clarifies that it will not be recovered. See, today my demand is X, penalty is X point something. Will I not be asked to pay X plus X point something? And if I file appeal 20% of that, all these things are going to be crazy for us. It's going to create a lot of issues. So according to me, this is absolutely ridiculous amendment. You cannot have assessment and penalty proceedings ordered together in the same order. So I am deprived of my right, first of all, to make further explanation during the penalty proceedings. Otherwise, it was available to me.
But appeal, you have to file
Consolidated
or a separate.
Consolidated, because it will be one order, one appeal. And in the same appeal order, I think you will decide both assessment as well as penalty. So we are happy if the proceedings are reduced. That is no problem. The problem is that your right of representation for penalty separately is taken away. It is a huge right actually. Many times, say for example, loan confirmations, they were not available at the original assessment. That time the person was abroad. The person from whom I have taken loan was abroad. Later on he comes back. I am having the possibility to get his confirmation, bank statement, ITR. I said that by penalty मत लगाओ कम से कम इसके ऊपर, right? मेरा अपील पेंडिंग है उसको वहां मैं देखूंगा, बट यहाँ पे तो एटलीस्ट पेनल्टी तो मत लगाओ. When they create demand, they have to cater to the demand. It's a devil which is born. Once demand is something, it's a devil. That Rakshas is born. Now after that Rakshas is born, every day you have to feed that Rakshas. It is very easy to give birth to the Rakshas, but to feed him on a daily basis, every month, every financial year end, उनके उसमें आएगा collection में, it is pending, then they tell you to pay 20% of those things. It's absolutely ridiculous. What type of demands are being created? Everything is nowadays taxed under 68 to 60 ND. You must have seen. Your sales are. I am contesting one matter which is coming up in the next week in tribunal. The person has sold goods to somebody. That person is treated as bogus. I am selling to Chintan. Chintan is treated as bogus. I have already included in my return of income. The department there says, no, this is not sales. This is your unexplained cash credit under section 68. Why? Because that person is bogus. Had it been purchased? Yes. What is the sense of doing this in the sales where I have already offered it? I paid tax on it bloody. They say it is a 68. Why? Not business income, 68. क्यों? क्योंकि उसमें 78% tax मिलता है. Ridiculous. Absolutely ridiculous. Such type of things are happening, and then you keep on contesting it and have many as far as litigation is concerned. So this is how it is. Anyway, so this is also going to be one more Pandora's box where I don't know where we are going to end. I think so. This is what settled position. With that, I think friends, I've taken some more time of yours and I've exceeded some time, but thank you very much for a very patient hearing. It was a pleasure. Unless there are some questions, thank you very much. And if the organizers permit. Otherwise, thank you very much. Yes. If you have questions.
Thank you, sir. We are going to share these presentations with all the members. One thing I would like to say. We are going to recognize members, these few members who are coming around 9:15 and sitting late and till the last minute. So I'm definitely going to skill to recognize few of those on that list. So I have asked all the we are sincere and coming around 9:15 and staying till last. So definitely we will be discipline. And thank you, Ketan sir, for your, our sincere thanks to you, sir, for delivering such an insightful and engaging lecture. Your expertise, practical approach, and clarity on the subject added immense value to our learning experience. We truly appreciate the time and efforts you invested in sharing your knowledge with us. We look forward to have more such enlightening session in the future too. So requesting our Deputy Convener, Bijal Modi, to give a formal vote of thanks.
Good afternoon, friends. Thank you, Lalitji, for giving me the opportunity to give the vote of thanks to Mr. Ketan Vajani ji. On behalf of the JB Nagar Study Circle, I proposed a hearty vote of thanks to Ketan ji for giving us the insight of the section 270, 270 AA and the penalty and how, and also gave the practical wisdom that how we can present our case to the AO CIT and his consistency with the law, and our study circle has the opportunity to have such a brilliant speaker on the penalty, which will encourage our practice for how we can settle the arguments with the AO and the CIT. So I propose a hearty vote of thanks, and I request all of them to give a hearty vote of thanks. Thank you, sir. Thank you so much. Thank you, sir. Thank you.